Hello guys, welcome back. Today's Wednesday, quite a freezing day. I'm literally freezing right now because I had to take off my jacket, but this morning was feeling like 7 degrees. I know for some of you that may be like, oh, that's already very hot because here it's minus something, but come on, we're in Sydney, so we like summer, we don't like winter, okay? And then we just started winter. Anyways, so today's Wednesday, it's the webinar day. It's the day that I do my trades live. So I mark up my trades with the entry, take profit, exit. I use the secret tool from FinLogix that I will be showing today, where we can trade against the majority of the market. And that's really, really cool because it's free. So if you want to have a look into this, please come from 4 to 5 p.m. Sydney time, the webinar. And for you to join the webinar, it's very simple. You just go into the description of this video. You will find the link to the Telegram. You click into that and join the Telegram. Make sure to click join group. When you click into the link, you will be redirected to the Telegram, but you're not going to be joined yet. You need to click into join this group, okay? Cool. So we do have a few things I want to chat, okay? So today we had we just had actually the GDP from Australia, and yesterday we had the CPI from Europe. Kind of interesting how the macro is playing out, okay? Because just yesterday I've had the webinar on Tuesday, and I've mentioned to everyone that the GDP was widely expected to come below what is, the consensus. And that's not, crystal ball. And that's basically what the RBA, the Reserve Bank of Australia, said on the RBA meeting minutes. And that's why it's so important, and that's why I keep saying it's so important for you to read any central bank minutes from the meeting. And also I've teach everyone how to leverage the AI technology to help you to use and quick and have an answer faster as possible, because sometimes the minutes can be quite long, maybe a few pages, like 10 to 20 pages. As of the rate statement is just usually 1 to 2 pages maximum. I've never seen any rate statement more than 2 pages actually, or more than 1.5 page. But anyway, so I've mentioned to everyone how to expect and what to expect from Australia, and they are expecting higher unemployment, lower GDP, and less labor market. Okay, so all of these 3 things will account to the inflation. If there is less people working, there is less people spending because there is less money into the economy, but there is less production. If there is less production, manufacturing goes down, services most likely will go down, and therefore the GDP, the gross domestic product, will fall. Okay, because there's less people producing to the growth of the domestic product. And we just had the release today. The expectation was 1.5 from the previous of 1.3, but the actual coming to 1.3. Australian dollar was stronger. Well, in the first few seconds, it was positive, was negative, for the Australian dollar. Anyway, so in the first few minutes was was negative for the Australian dollar, and like Aussie dollar, Aussie CAD, Aussie yen, all of those ones had a fall. Okay, anything with Australian dollar on the base fall, anything with Australian dollar on the quote went up. Also, we expected a few minutes afterwards a very strong bullish scenario for the Australian dollar. And why is that? So yesterday we had the RBA minutes, and then the central bank is expecting a lower GDP. The consensus was 1.5, the previous was 1.3, so it wasn't below the previous. So for this reason, is actually no change into the GDP. They haven't gained, but most importantly, they haven't lost, and that's what they were expecting. So this is actually what is going on the year over year. Now, the quarter over quarter plays out to different row. It came up to be 0.2% from the consensus 0.4 and the previous 0.6. So everything below. Now, yesterday, at 7 p.m., we had the CPI year-over-year from Europe. The actual came in at 1.9% from the consensus of 2%, from the previous of 2.2%. The month-over-month came in to be 0, so no inflation, and the core CPI over year came in to be 2.3 from the consensus 2.4 and the previous 2.7. So that's pretty good. We are having a actual deflationary pressure into Europe, and all of the euro, okay, I'm just looking at for everyone that are looking to long euro. I wouldn't look to do that in my personal trading, but you know, in my opinion, the euro is actually just going up for very structural flows into safety, okay, from the whole market at the moment. But if we look into a macro and you know, a sort of a geopolitical, there's everything to short euro, then not to long euro. Okay, so maybe not against the US dollar, but maybe against the Japanese yen, for instance, maybe against the CHF, maybe against the Canadian dollar, maybe against the Australian dollar. So all of that is actually making quite a play into the market at the moment. Okay, so most likely with those results from the CPI, the RBA will continue to do cuts of 25 increments, okay, 25 base points increments. So stay aware of whatever can happen with Trump and Europe from the next this month, actually from June and July, and if Trump has anything to say, because Trump just imposed another 50% tariffs on aluminium. Okay, so you know, the pressure after the market had that sort of relief off from Trump and China, Trump continues to put tariffs. Okay, so nothing really changed, to be honest. All right, guys, so that's all I have for today. I hope to see you around 4 to 5 p.m. into the webinar. As I say, it's free. We don't charge anything. The only thing I really ask you is for you to subscribe to the channel and give us a thumbs up, because that helps us a lot. All right, if you have any questions, bring them today at this afternoon from 4 to 5 p.m. and join the Telegram as well. See you all in a few hours. Otherwise, I'll see you in the next video. Bye-bye.